Time now for a closer look at the market action today. We're joined on the line by Dr. Heo-in, Professor of Economics at the Catholic University of Korea. Professor, it's great to have you with us.
Thank you for having me.
Well, over in the U.S., Federal Reserve officials seem open to removing policy support faster to keep inflation in check. There could be flexibility in taper pace. What can we expect based on the last policy meeting?
Yeah, the meeting of FOMC stated, quote, various participants noted that the committee should be prepared to adjust the pace of asset purchases and raise the target range for the federal fund rate sooner than the participants currently anticipated if inflation continues to run higher than levels consistent with the committee objectives, end of quote. They also said they would not hesitate to take appropriate action to address the inflation pressure that pose risk to its long-run price stability and employment objectives. In sum, FOMC is ready to increase the pace of tapering if the inflation getting hotter. Therefore, the rise of key interest rate would start earlier than expected. However, they also anticipated that the inflation could subside in next year if the supply disruption and the labor market problem is solved by then. The officials stressed that patient approach regarding the incoming data.
The FOMC's minutes, which seemed a bit hawkish according to some, would have impacted the NYSE. Here in the nation, the KOSPI was under 3,000 again. Do share with us your overall analysis.
Yeah, the result of the New York stock market is mixed. While the Dow Jones Industrial Average rose by 9.42 points, which is 0.03%, S&P 500 and Nasdaq increased by 11.68 and 70.1 point, which are the 0.25% and 0.44% respectively. Besides the meaning of FOMC, which affects the stock market negatively by indicating the faster tapering, and the economic indicator and the interest rate of Treasury bill also affected the New York stock market. Interest rate on the Treasury bill with 10 years maturity lowered by from 1.68 to 1.636%. And this makes a rebound of tech stock. The weekly jobless claims were 199,000, which was the lowest since 1969. So the fourth quarter of GDP is expected to be faster than the third quarter of GDP, which was 2.1%. Market Watch expected 4.8% growth in the fourth quarter. Korean stock market decreases in both KOSPI and KOSDA. KOSPI decreases 14.02 point, and KOSDA decreases 4.47 point. Due to the worry of faster tapering, the Korean won weakens against the U.S. dollar, which makes foreign investors sell more in Korean stock market in both.
Financial authorities in South Korea are moving to raise rates. What are the key reasons behind the decision to end 20 months of staying in the zero range? And also do fill us in on the ripple effects to come.
Yeah, the Bank of Korea has lifted the policy interest rate again, 25 basis points. They raised the key interest rate from 0.5 to 0.75 in August, and keep the 0.75% key interest rate in October. But so today increase is the second time in this year, and the key interest rate became 1%. And the governor of Bank of Korea, AGR, already mentioned that this is a good time to raise the key interest rate if we consider the inflation and the economic conditions of Korea. So it was not a surprise in the market. At the media conference after the decision, governor said that if the key interest rate kept still, the monetary policy would become expansionary with the inflation. the real interest rate, which is a nominal interest rate subtracted by the inflation, is still negative, which means that the monetary policy is not constrictive. And he said also the increase of the key interest rate today means that the monetary policy is getting normal, not tightening at all. And he also indicated that there is a good chance to raise the key interest rate in the first quarter of 2022 if the economic conditions continued. The liquidity in the financial market is abundant. He also said that committee paying enough attention to the economic growth and the fiscal policy to support the vulnerable. The increase of key interest rate would not be very constraining the consumption.
Well, some would say the rate hike was inevitable, of course, and now the focus shifts to the pace and scale of the move, especially to keep up with the Fed. What's your take on the direction forward?
Yeah, as you said, the monetary policy of Fed is have an influence to the rest of the world, since the U.S. dollar is the key currency in the international financial market. When the tapering and the raise of key interest rate happens, the market interest rate in dollar rise. And if the market interest rate in Korean won stays same with the rise of dollar interest rate, the investors would pull out their invest from a Korean financial market in order to seek higher returns in dollar financial market. Therefore, the policymakers should increase the Korean won's interest rate when there are tapering or raise of key interest rate in the Fed. In order to keep foreign exchange market stable. So the minute of FOMC suggestions of changing the speed of the tapering when the inflation in the United States is getting higher than expected, call for the raise of key interest rate in Korea. In addition to the change of monetary policy in Fed, the monetary policy of Korea also targets the price stability and the financial stability. So we have to see if there is any changes in Korean inflation or financial market stability in order to anticipate the monetary policy actions in the future. So as the governor already mentioned that, he would increase the key interest rate in the first quarter of next year. I would not surprised to see will be more than once key interest rate increase in next year.
All right, Professor Hein, thank you for sharing us with your insights. We appreciate it. We'll talk to you again soon.
Thank you.